Thanks so much for joining us. We heard from one mortgage CEO who said they got 8,000 calls last Sunday from borrowers. Are you starting to get any numbers, any read on how many borrowers are going to ask for forbearance?
Diane, we are, and I really want to caveat that the numbers I'm about to give you are very rough, very preliminary, and if you talk to me in 2 days, they'll probably be different. But with that in mind, my estimates now for Fannie and Freddie's book, we're hearing about take-up of about just over 1% of their book. So April looks like it'll be approximately 300,000 loans for Fannie and Freddie. For the overall market, that would translate approximately into 700,000 loans. We are thinking that closer to May, we'll see that for Fannie and Freddie's book closer to 1 million. So probably by May, a little more than 2 million. This is between 3 and 5% of the market. So I really do want to emphasize we're not seeing the worst case scenarios of 25, 30, 40% take up. We're seeing closer to 1, 2% take up. And I also want to emphasize the lenders I'm talking to are telling me that 70 to 80% of their calls are people who aren't yet facing a hardship, but really just want to know what their options are.
But those are some incredible numbers, Mark. Now, the CARES Act specifically states that borrowers do not have to prove any financial hardship to get forbearance, no documentation of anything. It seems like the potential for fraud here is pretty immeasurable, is it not?
There's certainly a concern there. You know, we're operating on the honor system. You know, we are asking and we're putting together a script for servicers. You know, this is supposed to be limited to if you've lost your job, you've lost income. You know, please, if you haven't lost your job, continue paying. You know, their servicing capacity in the industry is down by 25, 30%. We have to triage this like everything else. So it's important that if viewers are listening and they're thinking about trying to hold their liquidity for a month, if you can pay your mortgage, please do so, because we really need to focus on those people who can't.
Now, if the numbers get even bigger, we've seen one estimate of up to a quarter of homeowners, about 12.5 million households, could at some point seek forbearance for 6 months. Servicers could owe about $100 billion to investors. They have to still pay the bondholders. Is the mortgage industry equipped to handle this? Because we've seen nothing for the servicers who are going to have to pay all this.
Great question, Diane. I think if this only goes on for 2 or 3 months, in worst case scenario of what we see is, say, 20, 25%. I think most of the servicing industry, certainly Fannie and Freddie, could make it that time. If this goes beyond 2 or 3 months and we start to get worse than that, then that's going to be some real strain, and certainly we're going to see some firms get into a lot of liquidity trouble.
Mark, I just wanted to ask what you're hearing about the mortgage-backed security market. You know, the Fed obviously stepping in a major way last week, but when they withdraw, there are some signs and some chatter we're hearing about that market really tightening up. What do you hear about liquidity and how it's functioning?
We are seeing that, and of course there's a lot of stress in that market before the Fed stepped in. Spreads have narrowed a bit since then. And of course different segments are performing differently. The specified pools aren't performing as much liquidity as the TBA market. You know, Fannie and Freddie CRT market is largely shut down, but the broader TBA market, the spreads have come down. Unfortunately, some of that still isn't being passed on the borrowers. The spreads certainly are still wide in terms of what ends up with the borrower. Part of that, of course, is there are bottlenecks in the origination side, many of which we're trying to streamline and deal with. But I think you've seen a lot more stability in recent days for the MBS market than you did last week. Headed in the right direction.
Forbearance is available for government-backed loans. That's about 38% of mortgages today are not government-backed. Those are held in bank portfolios or private label. What happens to those borrowers?
So that's up to the lender, but we've had a lot of conversation with the bigger lenders. We've really tried to get out there and set some standards. And of course, what Congress did was essentially codify much of what FHFA had already started to do. We've worked with FHA. So while the government loans are not the overall market, my sense is probably about 95% of the market are following very similar circumstances. We're trying to put some guidelines out there, use a little moral suasion, trying to get everybody to offer the same terms so that for borrowers, when you call, you get treated the same regardless of what loan you have. And as you know, Diane, many lenders offer a whole suite of loans. And I think most of those lenders want to try to be able to give a consistent experience to their borrowers regardless of the loan product.
You know, I spoke yesterday with the CEO of Calabria Home Loans, Sanjiv Das. He was the head of Citi Mortgage during the subprime crisis, and he said he believes that from what he's seeing, it's possible that we could see even more delinquencies than we saw during subprime. Do you think that's possible, and do you think that they could translate into foreclosures, or that that's not going to happen the way it did during subprime?
I think in some segments of the market is certainly possible. I think we're going to see a lot more stress in the Ginnie FHA market than we will in the Fannie and Freddie market. You know, the truth is subprime really didn't as much go away as it went into FHA. So you have a lot of FHA borrowers who I think are vulnerable. The real question is the duration of this, and the question is how many of these borrowers will get back to work. You know, the plus is most of the lenders, in fact, all the lenders we're talking to, have told us that the inquiries they're getting, the forbearance they're getting, are overwhelmingly coming from borrowers who have never been delinquent, who have good, strong credit scores, and have every intention, it appears, to get back to current. So again, Diane, this fundamentally comes down to how long an event this is. If this only goes on to 2 or 3 months, we see a pop back in the economy, people are hired back to their old jobs by and large, then I think that this will be something the industry can get through without too much stress. But if this is something that goes on for 6 months or more, then I think you're going to continue to see a lot of stress. And I would really emphasize the place to look right now is the FHA market. With the quality, the credit quality of their borrowers, they're going to be the first canary in the coal mine, if you will, in terms of what the broader implications are going to be.
And do you think that's going to mean more regulation going forward? I mean, we've been talking for the last year about taking Fannie and Freddie out of conservatorship, and on top of that, more regulation for FHA. How is that going to change the picture you had of bringing Fannie and Freddie out of conservatorship?
Well, I think, as you know, Diane, and I'm almost a year on the job. I guess next week will make a year for me. Needless to say, it's been an interesting year, but I think a consistent theme that I have raised over that year is we have a number of structural deficiencies in our mortgage market, not limited to Fannie and Freddie, but certainly including Fannie and Freddie. And I think this crisis has illustrated where some of those flaws are. As you know, we a couple of months ago put out a request for information on non-bank servicer capital liquidity. I think we were quite timely on that and essentially ahead of the game. But again, I think there are a number of parts of the mortgage finance system, including Fannie and Freddie, that need to be strengthened as we go forward. It's always been my view that an exit from conservatorship is going to require a large capital raise by Fannie and Freddie. I've always believed that that's been a 2021, 2022 event. So I think this maybe puts off exit of conservatorship by a couple of months, but the delay is really quite modest in my opinion, unless, of course, again, we're trying to all figure out how long this event goes on. But if we're through this in a couple of months, then I still expect initial equity raises by Fannie and Freddie 2021.